Trump's greatest and longest held fears, an actual criminal conviction, and a public perception that he does not have as much cash as he claims. On the cash front, I'm not defending him, but there's almost nobody is worth billions of dollars. He's got $500 million in liquid assets.
An astonishing amount of money.
Okay, I don't know much about the high-end financial system. It does seem a bit ridiculous to me that you have to have liquid investments worth the amount of the bond that you're supposed to pay. Because, like, okay, once again, only from reading, but don't people often put up, like, their house or their mortgage or something in a bail bond type situation? So why can't you use then the collateral of your real estate, holdings, even in the state of New York, which presumably are going to be taken and held anyway? I guess maybe it's more of a higher risk profile. Again, I don't understand bond law or bond financing, but
I'm not an expert in this area either, so I'm not going to pretend that I am. I'm not going to speak out of turn like he does. But I will put an assumption on my part, best guess. I would suspect he was correct when he was suggesting maybe it's a risk profile thing. Just thinking on a very basic level, I would think it's much easier to, use the mortgage on someone's home, which is worth $300,000, $400,000, or $500,000. I would think that's a much lower risk profile than to take, say, a mortgage on a multi-million-dollar property. I'm just gonna guess, and I could be wrong, I'm not an expert in this area, that it's probably easier to sell just a regular single-family home than it would be to sell some big office building or whatever Trump has. So say he has $1 million equity in a building that is worth, I don't know, $500 million or $100 million. I don't know, man. I just don't think you could sell Trump properties as quickly as you could a home. But I'm just guessing, just speculating, because I guess they could do like a fire sale type thing where, they just sell it for whatever. I'm sure someone will buy it in that case, but I don't know. I just think it's a bigger deal when you're dealing with such a big property. And I would think his deals are more complex. Are there other investors involved? It just seems like it'd be a lot bigger of a deal than, again, just a single family home, just as one person or a couple with a mortgage, much easier to flip and a much simpler thing. So therefore, I would think lower risk. So maybe that's why they would take a mortgage from, someone like me versus a mortgage from someone like Trump. But again, I don't know.
It does seem crazy because if you had the liquid cash, then why wouldn't you just pay the bond instead of having a bond there anyway and incur some of the interest? I don't really understand.
Yeah, I don't either. Right. I mean, the one thing I read said that they don't even like to do a bond of this size.
Yeah, it makes sense.
I think this statement to me demonstrates the lack of knowledge of what Saagar, I don't know how to pronounce his name, he just doesn't really know what he's talking about. And that's understandable. You don't expect him to know every single thing. But if you're in the news media, I would hope that you investigate what you're talking about, especially something as simple as standard diversification strategies. There's a lot of things in the news media that require a lot of research, and you have to read a lot of things and understand a lot of concepts. This is not one of them. This is something that's very simple. This is the equivalent of, talking about housing and not being aware of the 30% rule in terms of you shouldn't really be spending more than 30% of your income on housing. This is a single number, which represents a very simple concept. Doesn't require a lot of time and effort to understand it. It's the same thing here. If you're going to be commenting on high net worth individuals that are worth billions of dollars, obviously, you're talking about someone who is going to have a more formal sort of investment strategy. Someone with a lot less money to invest may be more casual. Maybe they got a 401k or, they buy this stock. They think it's going to be a good stock to own. But someone who's worth billions of dollars is probably going to have someone that they hire to handle, their money in terms of how they invest their money, some kind of a, investment specialist of sorts, right? And because they're going to hire someone like that, that person is probably going to follow general principles of investing, right? They're going to follow sort of a standardized process. The idea that someone worth billions of dollars is just going to manage their money by themselves. Certainly that can happen. I think you'd more see that in the realm of, people like football stars, for example. That's why a lot of them end up going bankrupt. But, someone who's at the level of, what Trump claims, worth billions and billions of dollars according to his attorney, they again are going to have a professional, that's going to handle their finances. So what that means is a core principle is going to be diversification. You don't want to have everything in stock. You don't want everything in cash. You don't want everything in bonds, right? You don't want everything in crypto. You want things spread across different sectors and different instrument types. So sectors in terms of tech versus oil and gas versus, media, whatever it is, right? So those are sectors versus type of instrument, meaning stocks versus bonds versus crypto, right? You're going to want to balance things across. Reason being, let's say you put a big amount of your money into crypto and crypto goes bust, you go bust. You don't want any one sector or type of security or instrument to take you down, right? If the stock market goes bust and most of your money is in the stock market, again, you go bust. So again, you don't want any one thing to take you down. So you want to be all over the place such that if one sector or one sort of investment type takes a big hit, your impact is minimalized by you have a limited risk exposure. So meaning you only have a small part of your wealth invested into that area. You have your wealth spread into other sectors, which may actually be doing well. So for example, maybe, stocks are doing horribly, but the real estate market is doing really well at the same time. So you take a small hit on stocks because you have a small position in stocks. And then some of those losses are compensated by the rise in the real estate market, right? So the idea is to have a balanced approach. So you kind of have some level of stability. So point being, there is a standard allocation of how much cash or how much you should have liquid, meaning you can quickly access it. Like if I wanted to purchase something that I can quickly get to be able to purchase it. So for example, if I want to go and, buy a meal that's worth $100, right? Let's take credit cards out of the question. If I have $100 in cash, right, I can instantly go and have the meal. There's no delay. I got to put things in motion. That's liquidity, right? That's something that is slippery. It's fast, right? An example of something that's not fast is, let's say I own outright a $400,000 home. So I have a net worth in that home alone of $400,000. So in theory, if I sell the home, I can get $400,000 in cash. But obviously, the selling of a house takes a long time. I got to put it on the market, got to find a buyer. And then once we get a deal, there's a whole process of the closing and inspections, and it could be months before I actually see that cash. Even once the money is deposited, that can take some days for the money to even show up in my account and declare and all that kind of stuff. That is highly illiquid, the opposite of liquidity. But the bottom line is, the standard rule is you should have about 19 to 20% of your net worth in cash. Now, percentage is a relative thing, right? So 20% of cash for a 1 billionaire versus a 5 billionaire, 10 billionaire, 20 billionaire, it's going to be different numbers, right? So someone who is worth low billions, let's say about 3 billion, 20% of that, if I'm not mistaken, should be around $533 million. So if you're worth $3 billion, you should have about $533 million in cash. Some people actually use a 10% rule instead of a 20% rule. So 10% of their assets is in cash. If we do that, then someone with $5.3 billion net worth should have $533 million in cash, because that would be 10% of 5 billion. So whether you use a 10% rule or a 20% rule, according to the money that Trump claims to have, he should definitely have $533 million, right? That number grows substantially. I think, don't quote me on this, but I would think roughly if you're worth about $10 billion, you should have about maybe $2 billion in cash. So 10 billion net worth, 2 billion cash, or highly liquid. It could be, you could put it in something that you can get access pretty quickly. But 20 billion, I would say 4 billion in cash. Now, let me break this down. The idea of having $533 million in cash for someone worth, say, $3 billion is somewhere in the realm of a person worth $6,000 having, say, $160 in cash. I think that's about 20%, right? If you have a net worth of, say, $200,000, you should have maybe $35,000 in cash, right? It's relative to your total net worth. Now, one of the reasons, and this follows for someone, a normal person, as well as to a billionaire. For a normal person, you want to have this amount of cash because of potential emergencies, right? What if you have something comes up that you need cash for? You want to purchase something very quickly. Maybe you can't buy it with a credit card or whatever it is. There's just always a good idea to have a certain amount in cash available to you, right? Just for emergencies or whatever it is, right? When you scale it up to somebody like a billionaire, this is what happens. $533 million is not a lot of money to someone who's worth $3 billion. So the reason for that is when you are operating at that level, the amount of money you're spending for normal everyday things is tremendous. It could cost you about $60,000. This is like 10 years old, so probably more now, but I would say about 10 years ago, it would cost you about $60,000 for I think a round trip from, say, New York to Aruba on a private jet. Probably much more than that now, but that's an example. That's just for the flight, right? And you go into some fancy hotel, you're high net worth individual, you need special security. Maybe you need to fly your security with you. There's a whole bunch of other things. I mean, you could have something like a Bugatti Veyron, $30,000 per tire, right? When you have a vehicle that's $30,000 per tire, you're buying vehicles that are multiple $1 million in cost. $533 million cash is not something that is crazy. In fact, it is something that is prudent. Another thing is, for example, you need the liquidity for potential investments you want to make. And it's the same thing that applies to a normal person. If you're somebody who likes to invest in stocks, casually, just a regular person, you don't want to wait till an opportunity comes up and then scrambling for cash. Ideally, you want to pool up some cash, have it available in an investment account. So if an opportunity comes up, something changes in the market, whatever, you're like, this is a great opportunity, you want to move quickly, you want to have that cash ready so you can go ahead and make your trade. Same thing for someone of that net worth. First of all, I'm sure they have an investment account, right? And in order to trade, you need to have, well, it depends on what kind of account it is, but there's a system called reserve, right? So you need to have sort of a reserve account, and there's a requirement of how much in reserve you should have relevant to the investment you're making. So let's say, for example, you're a billionaire, right? So you might want to invest $100 million in stock. Right, that's not a huge amount of money at all. That's not that big of a deal, right? And that's the kind of level. Like for a normal person, you're investing $500, a few $1,000. 10,000 is a ton of money for a normal person. Billionaire, $100 million on a whim because you saw something with Boeing. This is going to be a new manager, and you think this manager is going to change things around, and you're always looking for opportunities to invest. You're not investing $10,000, $20,000. You might invest $100 million, $200 million. How would you do that if you didn't have sufficient amount of cash available to you? Right? So it's absolutely ludicrous to expect someone who is supposedly worth $10 billion, right? They said billions and billions of dollars, right? So, $10 billion, $6 billion, $5 billion. The idea for you to be at that level and you don't have $533 million in cash, that is ridiculous. However, if you ask me, I would say I would expect someone like Trump to not have $533 million. First, because I don't think he's worth as much as he claims. So rather than 10 billion, my estimate was more 3 billion. Obviously that's changing now with the Truth Social deal, but that's number one. So he's not worth as much, because if he's worth, $10 million, at that point, he's going to have, multiple billions of dollars in cash or liquid, right? Which means would be available to pay the bond, right? At the level that he claims, he would or should have, if he's managing his finances as he should have twice the amount of money that they're asking him for the bond. However, if you put it down to the level where he probably is, which is I think about $3 billion. That's just a number I'm throwing out there. Just based on everything I've heard, I think low billion. So if he's actually at $3 billion, which I think that is the case, then the 533 million would be a number that he would have if he was perfect in terms of, like they say 30% rule with housing. But a lot of people don't do 30%. Some people spend 40% of their income on housing. Some people spend 45% on housing. 30% is just a general rule, right? It's subject to your risk tolerances, whatever. So if he was just at that perfect level, he would have $533 million. However, if he was super good with his money, super responsible, he might have slightly more. But I would go in the other direction with someone like Trump. I think he's highly leveraged. I think he's irresponsible. I think he's a little bit of a buffoon. He's the kind of huckster that does stuff like that. Just like how he inflated the price of his properties, right? He's a person that, if he's got $5, he acts as if he has 10. That kind of person is not going to be following any kind of golden rules. So I wouldn't be surprised if he only has a mere fraction of what he should. So in terms of liquid assets, I wouldn't be surprised if he has, 200 million or less, which is interesting because they've now lowered it to 175 million in terms of what he needs to come up with. So probably has that amount, which is right about what he would have if my guess on his finances is accurate. Low billions, highly irresponsible, right? Therefore, highly overleveraged, right? So 200 million, 100 million or less is probably where he's at. So you can tell me your opinion of why it seems that reality seems to be aligning with my perception of the truth about Trump and his finances. Is this a coincidence? You decide. This is Debate Me channel. Debate Me in the comment section below. Click on the like button, subscribe, smash that bell. Be well.